Hello, in this video we'll compare Single Invoice and Selective Invoice Finance. These are useful options if you occasionally need to boost your cash flow but don't want to finance your entire sales ledger. You may have some customers needing long payment terms, or certain orders might have a lot of upfront costs, putting an unwanted strain on your working capital. Let's look at the options, starting with Single Invoice Finance. Option 1 would be Single Invoice Finance with a flat fee. This is popular with startups or companies without a long trading history, or with less than perfect credit. The funder will look to get bad debt protection against your clients and charge you a flat fee from 5% of the funds advanced, with around 1% to cover their bad debt protection. So for a £100,000 invoice, you would be forwarded around £94,000 within 12 to 24 hours. The bad debt protection is non-recourse, so there is no comeback on you if the funder cannot collect the debt. There are no personal guarantees required and no setup fees. Option 2 would be Single Invoice Finance with a personal guarantee. You'll get a better rate on Single Invoice Finance if you can provide documentation such as your company and your management accounts, and you can offer a personal guarantee. You would usually get 80% in advance and the rest minus the fee when your client settles the invoice. This is typically between 3.75% to 5.25%, including bad debt protection. The higher the invoice amount, the more competitive the fee. If your invoice is over £100,000, the fees can be as little as 1% to 1.5%. Option 3 is Selective Invoice Finance. Selective Invoice Finance lets you release funds from selected clients. This would require a longer term commitment, usually at least 12 months, and will require a setup fee. You would need to provide documents such as accounts, invoices, and copies of relevant contracts. The funder would require a debenture, giving them a legal charge over the debts, and will want a personal guarantee from you. Your service fee in this example could be as low as 0.9% per invoice, with daily interest worked out at around 3 to 3.5%. If you had £100,000 worth of invoices funded each month, the service fee at 0.9% would be around £900, with 30 days of interest at 3.25% coming in at around £240. Total fees for the month would work out around £1,140.30. Those are a few different ways that you can use invoice finance without putting your entire sales ledger through a funder. Some companies start off with Single Invoice Finance, and when it's viable, move to Selective Invoice Finance to reduce the fees. We hope you found this useful. Please check out our other videos, and if you'd like a quote for any type of invoice finance, go to wisefactoring.co.uk and get a quote in 30 seconds without any funders contacting you. Thank you for watching.